Good evening, everyone. Good evening. And welcome to Media Super's first annual member meeting. I'm here in Sydney. My name is Gerard Noonan and I'm the chair of the trustee board of Media Super. So I'd like to begin by acknowledging the traditional owners of the land, the Gadigal people of the Eora Nation, on which we stand here in Sydney today. I'd also like to pay my respects to elders past, present and emerging, and extend those respects to any Aboriginal and Torres Strait Islander here tonight. I'd also like to acknowledge, given that this annual members meeting of Media Super is being streamed online, I'd like to acknowledge the 200 or more traditional First Nation peoples across Australia. And in saying so, I'd also welcome the excellent Uluru Statement of the Heart and urge you all to read it. But before we begin, a little housekeeping. So please ensure all mobile phones are turned to silent. Tonight will run until approximately 7:30 p.m, after which we invite those in Sydney to join us for some sandwiches and tea and coffee. I regret no Wagyu beef or Shiraz here tonight. And I'd also like to introduce members of our board here this evening. Philip Anderson, the former CEO of the Printing Industry Association of Australia. At the other end of the table, Matt Diener, whose day job is running the Screen Producers Association of Australia. And Carmel Tebbutt, a former Deputy Premier of New South Wales. And with me here in Sydney also is our Acting Chief Executive Officer, Tony Griffin, and our General Manager Engagement, Jennifer McSpadden. In Melbourne, we have our Chief Investment Officer, Norman Zhang, whom you'll hear from later, as well as Sue Hewitt, our Finance and Compliance Manager, and Michelle Chasser, our Legal Counsel and Company Secretary, who are both on hand in case there are product or legislation questions. So this annual member meeting is designed to offer members transparency about the way your fund operates and give you the opportunity to ask questions and hopefully receive satisfactory answers. This is your meeting. This is your fund. It's your money, and we want to help you make the most of it. We're here to cover what's happened in the past financial year and what we have done and what may happen next. This is about holding ourselves accountable to you as members of the fund and hearing from you as members of the fund. It's one way of saying we're here to help you make the most of your future. The meeting this evening is being streamed live to members around Australia so that we can reach as many of you as possible, wherever you may be. I'm pleased to see so many members in the room, along with so many members online. Apparently there are around about 80 online at the moment. It's also being recorded and will be available on our website, along with your questions and answers in due course. A brief additional bit of housekeeping for those of you who are online. You'll see an icon on your screen for Q&A. You can type in questions that way. For privacy reasons, online questions will be viewed by a moderator only and not broadcast, but I'll be identifying appropriate general questions in a later Q&A session for a response. If your query relates more to your own account or your own personal circumstances, I'll steer that towards an appropriate member of our staff to follow up. So for tonight's agenda, our meeting this evening will include an overview by Tony Griffin, our Acting CEO, on membership matters, on regulatory issues, and on insurance, the coverage of insurance and changes to our coverage. From Melbourne, you'll soon hear from Norman Zhang, our Chief Investment Officer, on investment returns, his reflections on the past year's performance, the economic and market outlook for 2019-2020 and beyond, and also environmental, social and corporate governance matters in the companies and markets in which we invest. So, transparency, accountability, stability, and a strong all-profit to members culture, underpinned by a governing board drawn from union and employer ranks. That's our commitment to members. Investment performance, it's been a very strong year for the fund in many ways. Investment-wise, we're very proud to be among the top 3 super funds in the country for the year to June 30. Our annual performance of 8.76% for our balanced fund, in which approximately 7 in 10 of our members are located, is a great achievement. Norman Zhang will talk about performance a little later. Since the fund was created almost 3 decades ago, our performance since inception has been over 8% per year. We think that's a great outcome as part of the great retirement system which operates in this country. It's certainly a lot better than keeping it under the mattress. And we look forward, as the flow of funds into your accounts increases, as the superannuation guarantee payments lift from the current 9.5% to 12%, as legislated, as I keep on reminding our colleagues in Canberra, over the next handful of years. Indeed, we're in the running for the very prestigious, of all things, Smooth Ride Award this coming Wednesday night at the Super Ratings Annual Fund of the Year Awards. It's awarded to the fund that has best weathered the ups and downs of the market while also delivering strong outcomes. This nomination is, of course, a testimony to the outstanding work that the entire team, led by our Chief Executive Officer, Graham Russell, and Norman Zhang, our CIO, as well as our advisors, Frontier Advisors, our investment committee, and our board, to ensure more of you, our members, retire in comfort. Fee-wise, according to Research Group Super Ratings, we remain ranked as one of the lowest fee funds. Insurance-wise, we've maintained the 20% premium drop, which we negotiated in 2018. It's also been a big year for scrutiny of the fund and the superannuation industry generally. You will doubtless have heard or read about the conclusions of the Hayne Royal Commission into misbehaviour in the finance sector in Australia. Like all industry funds, we were caught up in the process. In fact, we provided literally thousands of pages of documents to the Commission staff about our operations. But the focus of Hayne, appropriately, was on the discovery of what we thought was absolutely atrocious behaviour by the major banks in Australia and their superannuation subsidiaries, as well as funds like AMP and IOOF. We were confident our culture and our risk practices would serve us well, and they did. After scrutiny of all our details, all that material that we sent in, the Commission seemed to simply say, nothing to see here. So Media Super can hold its head high. Operationally, it's been a big year for the fund. We've reached $6 billion in funds under management. That's right, 6 billion. Normally our CEO, Graham Russell, would be presenting this tonight. However, Graham is on sick leave at present, so we wish him well. Instead, I'm pleased to introduce Tony Griffin, our Chief Operating Officer, who is also currently rising to the challenge of being active CEO until Graham's return. Tony will now go into more detail about the efforts we have made to assist more members retire in comfort and demonstrate how we remain committed to acting in members' best interest, and show you how we ensure your savings remain safe and secure. Tony.
Should Phil and I move because of the slide? No.
Thank you for that introduction, Jared, and good evening, ladies and gentlemen. In my presentation tonight, I'd like to focus on 3 key points. Our vision, which is to help more members retire in comfort. The second point, Media Super is committed to always acting in the members' best interests. And the third point, we work hard at Media Super to ensure your retirement savings remain safe and secure. So to elaborate a bit on point one, and that is to assist more members to retire in comfort. At 30 June 2019, Media Super was over 75,000 members strong, and we had over 16,000 contributing employers. Our sophisticated predictive analytics show that 54% of you are on track for a comfortable retirement. But what does that mean? According to the ASFA retirement standard, for those aged 65, that means an annual income generated from an allocated pension product such as ours of over $61,000 per annum for a couple and $43,000 for a single person. And if you compare that to the maximum age pension currently, it's about $36,600 for a couple and $24,300 for a single person. So quite a bit more if you can get that balance up at the point of retirement. At the end of the year, your super savings were part of a larger pool of $6 billion, as Gerard mentioned before. And this has grown significantly since the inception of the fund. The fund is also cash flow positive, and that's very important to the regulator, that it's kept positive. That said, the system is designed to pay people out. So there is now money starting to flow out of the fund, paying people benefits. I'll go into that a little bit later. According to independent research house Super Ratings, our fees are highly competitive, with a fixed administration fee at $65 per member per annum and a 15 basis point or 0.15% variable fee based upon your account balance. And we've capped that at a maximum of $600 per annum. Our pension and super products, again, were awarded a AAA rating by independent research house Selecting Super. And furthermore, our superannuation product maintained its 5-star rating by the Heron Partnership, and the number of members who are recommending Media Super to their friends, families and peers is increasing. This year, we introduced a number of products and services, including our indexed balanced option. Indexed balanced funds are invested in a mix of asset types, but are less diversified than a traditional balanced option, where a lot of our members are actually invested, aiming to provide a moderate investment return. Media Super's indexed balanced fund is one of the more diversified, low-cost options available, as it includes investments in emerging markets, equities, listed property, and listed infrastructure. The Barefoot Investor has suggested using a low-cost index option to achieve what he refers to as an SMSF light strategy, that is low cost with ultimate control. And by combining an indexed option with a direct investment product, you get the best of a self-managed super fund and the ability to invest directly in shares, and the best of a traditional super fund with low operating costs. Additionally, we've made a greater commitment to the continuous improvement of our environmental, social and governance profile across our investments. Our CIO, Chief Investment Officer, Norman Zhang, will cover more about ESG in his presentation later this evening. We became a founding member of the Insurance in Superannuation Voluntary Code of Practice. This means we are committed to communicating in a format that is consistent across the industry to help members better understand their cover and compare across different super funds. So it's creating a consistency, the voluntary code. And soon it's touted that voluntary code will actually be legislated. 50,000 members in our fund have death and total permanent disablement insurance cover, while 23,000 have income protection. The rate of pension payments for the fund have increased in line with our ageing demographic. The key purpose of a pension is to reinvest your money and to pay it back to you while it continues to grow instead of taking a lump sum, preferably whilst your underlying capital is being preserved, which is the primary objective of a pension product. And when you hear market commentary, people commenting on an income stream, that's what they're talking about, having a balance which will pay earn income during the year, and you can have your pension paid out of that income. You can use the capital to do other things that you might prefer to do, travelling, save it, lots of options there. It's a tax-effective vehicle, an allocated pension, which is designed to either reduce or eliminate the requirement to rely on the government age pension in totum or part thereof. To that end, from a pension perspective, we're proud to say that our balanced option had a top 4 finish for the 2018 and 19 financial year. The second point I'd like to make is we remain committed to always acting in your best interests as members. This year we've seen further impact, as Gerard said, from legislative and public policy changes. We've also seen the final reports from the Hayne Royal Commission and the Productivity Commission handed down, and the outcome of those reports and how they've impacted your super and how that is managed. These reports have impressed upon the industry to build consistent controls to ensure your money is taken care of as per your wishes. Media Super welcomes these changes. As a fund run only to benefit members, it was very disturbing to see the impact on hardworking Australians resulting from the inquiries during the Royal Commission. This year, we've seen the implementation of the following activities: a cap on small accounts, less than $6,000, must have fees capped at 3% per annum. The transfer of small inactive accounts to the Australian Taxation Office. The number of our members affected by this was lower than the industry average, as we've been proactive in contacting members for several years now about their balances. Additionally, we've worked with an eligible retirement fund by the name of Ozfund to form a cross-fund matching process with other like-minded industry funds. In Tranche 1, we reunited over 1,700 members with their super in other industry funds. Tranche 2 is about to be performed this week. Also, there's been a loss of insurance for inactive accounts and the removal of exit fees. Media Super welcomes this change, definitely. I remember I signed up when I was 18 in a retail fund. A friend of mine was an agent. It was a life-backed fund, so it had insurance policies underneath it. And it had a 30% exit fee on it. So you can imagine what I did on the 1st of July. So waiting for that day. The Productivity Commission, final report findings. Industry funds outperform retail funds on average by 2% over the last 7 years. And this would add up to a lot of money over 40 years, the compounding effect of that. Another finding was that superannuation funds perform well for 2/3 of Australians who are in good performing funds, whilst the remaining 1/3 of members are in poor performing funds. This is scandalous given the fact that superannuation in Australia is compulsory. For our part, we have been consistently working hard to attract members in the print, entertainment and arts industries to Media Super out of poor performing funds, and we will continue to do so. The Royal Commission final report, as Gerard said, a clean bill of health for industry funds. For our part, Media Super have always acted in members' best interests. We have done exactly what we are meant to do, and that is to focus on the best interests of our members themselves. The industry fund model allows us to concentrate solely on the value of member benefits without being compromised from the conflict of increasing value to shareholders, as do the retail sector of the industry. We also strive to make an overall difference to your retirement. According to Super Ratings, our fees are amongst the most competitive in the industry, and not just when compared to bank-owned and retail funds, but also against other industry funds as well, which leaves more value for you in your retirement. At just $1.25 per week, plus 0.15% of your account balance, Media Super is committed to keeping our fees low. Just looking at investment performance, I'll focus on the 7-year because superannuation is a long-term investment as opposed to short-term. But you can see 9.89 is what our balanced fund achieved on average over that 7-year period against the SR50 option by Super Ratings, by a series of other funds who average around 9.48%, and the worst performing fund did around 6.93%. So huge difference there before comparing the performing funds against those that don't perform well at all. So it's about a 30% difference between 9.89 and 6.93. It's a lot. We'll look more in detail at what Media Super's investment performance, though, has achieved in Norman's presentation, but I'd like to give you a sense of what it all means when you put your fees and returns together, which we commonly refer to as the net benefit to member. This is important because fees and returns are two very important components of the whole model. There is a little point getting a high return if the fee being paid is going to significantly erode those returns. Even small differences in fees can translate into larger differences over time, as super is a long-term investment and it pays to be aware of what you're being charged. So looking at the combination of Media Super's long-term returns and fees, once again, I'll go out to the 15 years. So based upon a $50,000 starting income and a starting superannuation balance of $50,000, both 50, after 15 years, Media Super's amount would have been $266,000 there versus the median of $234,684. And then the worst performing fund, $209,000. So we were 21% better than the worst performing fund over that period of time. So it gives you a sense of how important the magic of compounding is. So you also can calculate how better off you'd be by the compare the pair calculator, where you can compare Media Super to a wide range of other super funds. And this calculator is located on our website, our public website. In addition to investing your contributions, so you have an income in retirement, Media Super automatically provide eligible new members over the age of 25 total and permanent disablement and income protection, and also death cover. Members under 25 can also apply for that cover, but you actually have to opt in. But so members under 25, the premiums don't necessarily erode their balances too much. Also, people under 25 generally don't have as many financial commitments as people outside that age bracket. This means if you should be injured and temporarily or permanently unable to return to work, or if the worst should happen and you should die, your family has support through one of our insurance products to provide greater options to adjusting to that undesirable situation. Our cover is specifically designed for our membership, providing cover for members working overseas in war zones or while doing their job, even in private aircraft. To protect our members, we have designed our offer so that if you are injured, you can make an income protection claim. This is designed to provide you with sufficient income to see you through a 5-year period. If you are still unable to return to work after that time, you are able to apply for a total and permanent disablement, which will be paid as a lump sum. You can, of course, apply for a TPD prior to the expiry of the 5-year period of the income protection product. You may ask why we engineered this flexibility. We found many members who applied for TPD were able to return to work within the 5-year period. My last point for this evening is ensuring your retirement savings remain safe and secure. Independent ratings house Super Ratings has rated Media Super's fund governance, including the fund's structure and risk management, as excellent. In terms of our financial statements, the level of our net contributions is just a highlight. 367 million came in the year ended 30th of June 2019, and payments, including pensions, were 325 million. And this comes to my point before, the system is designed to pay people out as well as collect the money in through contributions. And total assets, of course, as we mentioned before, were $6 billion in those financial statements. The fund received an unqualified audit report from external auditor Deloitte, and we have a comprehensive internal audit program planned for 2019 to 2020, which will be performed by EY, or what we used to know as Ernst & Young. So the idea of the internal audit is to make sure that we're complying and we're having reviewed all those new controls and requirements that we've been required to put in place by the Royal Commission, Productivity Commission, and also to check our existing controls. Our future focus: investment in financial wellbeing education and advice to help our members better engage with your money and your super. This will include stepping up our support for people with intermittent incomes. We are increasing our investment in better tools to make information and advice more accessible. This includes a new website to better help you get answers from your questions at any time, day or night, digital advice, telephone advice, and a boosted helpline. So the website, we're still building it, but it will be coming during the course of the year. When it comes to legislation, we have a very busy year ahead. Default insurance is to be removed for under 25s. Based on our understanding of our members' demographic, Media Super embraced this change early in 2018. And given this fact, this change will have a low impact on the Media Super members in 2019 and 20, because we're ahead of the bell curve with that. From the 1st of April next year, members with under $6,000 will no longer automatically receive insurance unless they make an election to opt in. A new governance regime, referred to as BEAR, the Banking Executives Act, will be introduced to Super, which will make executives and board who run superannuation funds personally accountable to the regulators. The banks had to introduce it at the 30 June this year, and superannuation will be required to do it during the course of next year, and insurance will follow after that. If you do have a complaint with us or any banking, insurance or superannuation organisation, by law it will have to be handled faster. It's required that complaint resolution will be reduced from 90 to 45 days from March 2020. We continue to support the print, media, entertainment and arts communities we serve. We always strive to be more than just a service provider. We are part of your community. For example, just last Wednesday, we were the event partner for Print to Parliament, where the print and packaging industry leaders from across the country shared the best in print with politicians and policymakers. The fund also supports Two Sides Australia, an organisation committed to ensuring paper and print remain versatile, practical and powerful communication tools. Our support means that unlike some corporate entities and banks, we will never charge our members for the right to have a paper statement. Through various partnerships with peak industry bodies, we support internships, education programs and awards that celebrate and support our talented members. And we actively invest for a sound financial return. This slide shows a sample of the latest films and television we have invested in via Fulcrum Film Finance. We also invest in live performance such as Charlie and the Chocolate Factory or Muriel's Wedding, or in musical instruments via the ACO Instrument Fund. As always, markets and the economic environment can be challenging. I'm about to hand over to Norman Zhang, our Chief Investment Officer. We're very pleased to have Norman with us tonight, as just last Wednesday, he became a father for the 3rd time. Norman and his team worked tirelessly to ensure we were getting you a stronger return, which is what Super is all about. I'd like to welcome Norman to the podium for 2 minutes.
Thanks, Tony, for the introduction. I'd like to express my apologies for not being able to attend in person today. We had a new addition, and that's the reason I couldn't travel to Sydney. I would like to start off by providing highlights for our investment performance over the 2018 and 2019 financial years. Next slide, please. Over the 1 year to 30th of June 2019, Media Super's default option, which we call the MySuper balanced option, delivered a return of 8.76% for the year. We see this as a relatively strong return, and it ranks in the top quarter or top 25% of the funds for the year. According to Super Ratings, we were the third best performing default option across Australia. Now, this performance also permeates across our other options, with our growth option and our stable option also performing in the top 20, also ranked in the top 3 funds in its own categories. At Media Super, we invest over the long term, and we set up our portfolios to invest across an economic cycle. So while the short-term performance has been really pleasing, I think for us, the more pleasing element is that over 3, 5, and 7 years, our default balanced fund has also ranked in the top quartile. Next slide, please. I'll briefly go over what transpired in investment markets over the 2018-2019 financial year. The last financial year was a classic case of a year of 2 halves. If we look from July to December 2018, it was a time when markets fell broadly around 10% globally. And this was because of several factors. One was the escalation and the trade war tensions between the United States and China. There were some poor corporate profits coming out of the United States. And it was a time when markets were very, very jittery about the prospect and the pace of interest rate rises in the US. So all this culminated to a fairly scary time for markets. During this period, the average superannuation fund delivered a return of around negative 2.78%, while Media Super's balanced option was a lot more resilient, falling by only 0.85% during this period. And the resiliency was due to several factors, one being Media Super's holdings in high quality infrastructure and property assets, as well as our portfolio protection program that mitigated some of the downside risks from the falling equities. Fast forward to January 2019, we saw what I believe is one of the quickest and steepest rallies that we've seen in recent history, with several certain equity markets around the world going up as much as 20% for the 6 months. And this is really due to one factor, and that's the announcement by the Federal Reserve in the United States that they were looking not to increase interest rates, but to actually decrease or potentially decrease interest rates if needed. And that changed the sentiment in the market. Domestically, we've seen this, the same thing, with the RBA cutting interest rates multiple times this year, and was open to the prospect of unconventional policies such as quantitative easing going forward. During this period, Media Super's portfolio kept track with the market, and we delivered about 10% for the second half of the year, which combined resulted in our 8.76% for the year. Looking back over the year, the best performing asset classes was shares, equities, domestic and global, infrastructure assets, and also government bonds. Next slide, please. So now we're on to the current financial year, and similar to many other investors, we're very cautious about the outlook for the year. One of the key reasons is that we've been in a growth cycle for a very long time now. In fact, this has been the longest period of growth without a recession in history globally. This, combined with the fact that share markets have increased at a rapid rate over the last 3 years, means that valuations, not just in shares, but also in other asset classes, are now at all-time highs. Now, that in itself isn't a signal for imminent falling markets, but there are risks on the horizon. And this includes factors such as the ongoing trade war between the US and China and a further escalation of that. Brexit and what a messy Brexit could cause, particularly to the economies in Europe. And domestically, a sluggish retail sector may permeate into the broader economy and may halt economic activity in Australia. That being said, there are also factors that balance out some of these risks, including the fact that the fundamental underpinning of the growth that we've seen over the last several years, particularly in the United States, remain present, and the fundamental drivers of growth, such as low unemployment, low inflation, remain present. And also, probably the bigger factor is that central banks around the world are open to further decreasing interest rates and potentially opening up to unconventional monetary easing policies like QE. Given the uncertain outlook over the year, Media Super continues to build a very diversified and balanced portfolio. We've built flexibility and have certain assets in the portfolio that will perform well when markets go down, but we also retain a good degree of growth assets in the portfolio that if the market continues to rally, that our portfolio will not miss out on growth in the share markets. The final area I want to touch upon in my update is around the area of ESG, which is environmental, social, and governance. We're very pleased to say that we've made 4 significant developments over the past year. The first being we became a full member of the Investor Group on Climate Change. And the reason being is that we want to be able to collectively, as institutional investors, work together to tackle one of the biggest risks of this generation, which is the impacts of climate change. The second development is we became a signatory to the ACSI Asset Owners Stewardship Code. And what that is it's a collective initiative to improve governance and transparency in the companies that we invest in. And this is particularly relevant given the findings of the Banking Royal Commission, that we need to be more responsible investors, and we've got to keep the companies that we invest in accountable on governance issues. Thirdly, Media Super is committed as an impact investor in our ESG targets. Our board has approved a further $330 million investment in new ESG investments. This includes investments that make a positive impact on climate change. This involves investments that contribute to the industries that Media Supers represents. And finally, these are new investments in innovation and good infrastructure for Australia. Finally, the final development in ESG initiatives is what we've done similarly to tobacco and controversial weapons in the past, is that we've decided to divest from thermal coal across our portfolios. The reason why we're doing this is because of the long-term financial risks of holding what potentially could be a stranded asset, the availability of alternative energy sources that are cleaner and are also reasonably priced, and finally, the difficulty in actively engaging with pure thermal coal mining companies to diversify their businesses away from thermal coal mining. Overall, we see improving ESG as a continuous endeavour, and we'll be exploring new initiatives every year, and we'll to improve when the opportunity presents itself. Thank you for listening through my presentation. I'll revert back to our Chair, Gerard Noonan, for the next section.
Thank you. All right. Well, look, I think that we're reaching the end of our, as I say, the first of our annual member meetings for Media Super. So I'd like to thank all of those here in Sydney who've come along this evening. And of course, all of you online who've been patiently sitting in your own locations and listening to this. I should mention that this online process, as well as a public access, will be now an annual event for Media Super, as it will be for all superannuation funds. It's going to be a requirement from next year that we do this, that we have an annual members meeting, and it will be typically held at around about this time next year for Media Super. I'd like to also thank the members of our board who are here tonight. So to you, Phil Anderson, and to Carmel Tebbit, and to you, Matt Diener, who had an unexpected walk-on role.
That's great. Happy to do that.
But I'm also thankful to you, Tony, for being here tonight and to giving us an outline. To you, Jennifer McSpadden, for your late entry on matters to do with pensions. And of course, to our great colleague in Melbourne, Norman Zhang. So in doing so, I'd like to declare this annual members meeting closed, and I'd ask those of you here in Sydney, but not those of you online, could you join me for some refreshments? And I should mention that there are a number of people here from Media Super who, if you had specific questions about your own personal circumstances or your own account, they'd be more than happy to handle those. So thank you all for coming. Thank you all online. Good night.